G'day folks, welcome back to another update for gold and silver. Now this video is a request from one of my viewers asking to do an update on the silver, which has broken new highs or broken through the resistance. We'll go to that in a moment.
No way!
Also, to support the channel, why not subscribe to the Patreon page where we've got the +1 videos, but also some bullish shares which we run a scan each week. So first we'll briefly cover gold. Now gold hasn't really changed much since our last update. You can see here on the daily chart, pretty much consolidating just above the moving averages. But again, notice the CCI is dropping off. It's not a bearish divergence, but more of a consolidation on the daily. And in terms of the back test, you can see that it's going long from that point according to the daily. You would have been going long according to the moving averages and closing it out when the moving averages turn down, but also paying attention to when the CCI is dropping off and going in a divergence compared to the price. So where we are today, again, it's consolidating, so not really much has changed for gold. Okay, I'll spend a bit more time on silver. The reason is because since our last update, you'll notice here, price has broken up past that previous high. And we did draw this bearish divergence, which was down to that level there. Now you'll notice there the CCI has risen slightly. It's still probably, although slightly higher, I'd still consider that a double top. So it's still probably technically a bearish divergence compared to the price. You can see a lot steeper rise on the price. If that CCI rises any further, I'm going to invalidate that divergence. So in which case, on the weekly now, it's still possibly a bearish divergence. We'll just draw back a Fibonacci down to go back to that low there, which means we have to realign that target range to that 23, 38% range if it pulled back from there. But at the moment, no sign of it yet, and that's why we need to go to the lower time frame. So possibly still a bearish divergence on the weekly, but less likely. On the daily, you can see that it's broken through that resistance at 5,900. We're going to move that to that new high there, and we're also going to realign the divergence. Now you'll notice here the divergence on the CCI is still pretty sharply declining versus a sharp rise in the price. That's a clear bearish divergence. And to draw a Fibonacci from that new point, we have to realign that target range, take it back to that low there. And we realign at 23, I keep saying 21, 23 to 38% range, a new minimum target. That's assuming it pulls back from there. Of course, we could still go higher, but that's still a bearish divergence to that level. Now we also look at the 1 hour time frame, see if there's any micro moves. You can see there very clearly, since our last update, we've got bearish divergence on the 1 hour versus the same period on the price chart. That's also a bearish divergence. So again, on the 1 hour time frame, divergence will look like that level. You can see there it's already hit the 23%, so let's take it down to that level. And it's just shy of that 23% at the moment. We draw that accurately to that level there, just shy of that 23% if we took it down to that level there. So the CCI is still dropping, and very likely we're going to see the price also drop. So just be cautious about going long. I'd like to see the CCI break higher, but also I'd like to see the price break through that resistance to be more bullish. Now looking at the back test, and if you're going long according to the daily from where that arrow is placed into November, then you would have been going long during that price rise on the moving averages and paying close attention to any bearish divergence. So you would have watched carefully, you would have closed it out somewhere there and made those couple of little trades there with some couple of average downs. Again, avoid going short, maybe going long there and closing it out. You can see a couple of trades made there. Avoid going long and going long during that little period and closing it out somewhere there. Notice there as well that you would have avoided that drawdown because that was still in decline. You probably would have started going long from that point there. Now we had a bearish divergence here. Again, you probably would have closed it out there when the price broke below the moving average. Price is pretty much consolidated during that period. Then it's finally risen in that last little rise. And then you would have closed it out at that point. You can see the trades made there. Now this was opening up a new position there according to the back test. But again, notice the CCI is dropping, so if you want to be really conservative, avoid taking any long trades at the moment. As I said, until you see the the CCI start to move in tangent with the price and there's no divergence. At the moment, it's a bearish divergence. It could break down to this 23-38% range, or it could fall a lot further. So we can't tell. We take it one step at a time. Hopefully that's been of help to the request. Still a bearish divergence on the hourly. It's a bearish divergence going to the daily chart. Clear bearish divergence on the daily, and there's possibly still a bearish divergence on the weekly, but we'll take it one step at a time, beginning from the hourly, to see how it progresses.
Always follow the strategy.
Okay, thanks for the viewer's request. If that was help, hit that like and subscribe button. Thanks for watching, and don't forget to subscribe to the Patreon page to get a deeper dive into some other trading strategies and also some bullish share scans.